Okay, sorry everyone. I'm not sure if my mic was off there for a minute. Can you hear me now? Can everyone hear me now? Okay, great. So this question is on week 2 of leases. So now you have covered operating and finance leases. So let's have a look at this question. On the 1st of January 2016, Adam Limited entered into a 5-year non-cancelable lease agreement as lessee. The equipment that is being leased has an economic life of 7 years, at the end of which it is expected to have no value. At the beginning of the lease, the fair value of the equipment is $250,000. On the 31st of December, for each of the first 4 years of the lease term, Adam Limited is required to pay the lessor $63,000. At the end of the lease term, ownership of the equipment passes to the lessee upon payment of the final lease amount of $70,000. The interest rate implicit in the lease is 10%. So that is note 1. Let's go down to note 2 and have a look at what they tell us there. So Adam Limited also entered into another lease where it leases a building under a 20-year operating lease. The lessor gave Adam Limited a rent-free period for the first 3 years as an incentive to the lessee to entering into the lease. The lease payments are fixed at 10,000 Rand per annum for the lease period. Okay, so we have 2 leases here, one in note 1 and the second one in note 2. Let's have a look at the required. So how would you classify the arrangement in note 1? Okay, so if we go to note 1, we need to decide, are we going to classify this lease agreement as an operating lease or as a finance lease? Which of you think you would classify it as an operating lease, and who thinks they should classify it as a finance lease? Can anyone tell me? So here we would have to go through the requirements of a finance lease. So if any of those requirements are met, then it will be classified as a finance lease. Okay, so you are correct. We are going to classify it as a finance lease because it meets the requirements. So if we go, so the first 3 requireds are kind of grouped. So it says here, how would you classify the arrangement in note 1? So the arrangement is a finance lease based on the criteria. Based on your answer, in 2.1, provide reasons for your answers. So here they want you to go through all of the reasons, okay? So as we can see from the example here, at the inception of the lease transfers substantially all the risks and rewards incidental to ownership from the lessor to the lessee. So in substance, the lessee owns the asset from the inception of the lease. So if we go back to the question, we can see that Adam is actually going to get this asset at the end of the lease term because it is going to buy the asset at the end of the lease term. So because of that requirement, we can see that substantially all the risks and rewards incidental to ownership have passed from the lessor to the lessee. Okay, that's not the only requirement met. So the lease transfers ownership of the asset to the lessee by the end of the lease term. I've already mentioned that one. So Adam is going to buy the asset at the end of the lease term for a small amount of money. They also mention here, so at the inception of the lease, the present value of the minimum lease payments amounts to substantially all of the fair value of the lease assets. So if we have a look at the fair value given to us in the question, it tells us that the equipment has a fair value of 250,000. In the question, they don't give us the minimum lease payments amount, but it is something we need to calculate, okay? So if you go to the next required 2.3, you'll see here we actually need to calculate the minimum lease payments. Okay, so let's have a look at that calculation. Does someone have a question? Okay, it looks like someone might have raised their hand. So basically here in the second part of the required, they're telling you that at the beginning of the lease, the present value of the minimum lease payments is amounts to substantially all of the fair value of the lease assets. So it's saying that in required 2, but you can't really determine that until you have calculated the present value of the minimum lease payments. Do you have a question, MT? Okay, I'm not sure if you have a question. You can speak if you do have a question. Okay, so let's have a look at the calculation for the present value of the minimum lease payments. We want to determine what is the amount of the present value of the minimum lease payments. And we need to compare that amount to the fair value of the assets. Okay, so let's have a look at the calculation to calculate the present value of the minimum lease payments. So what does this big phrase mean? It sounds very scary. Present value of minimum lease payments. So before we can present value this thing, we need to first ask ourselves, what is minimum lease payments? What are the minimum lease payments? So the minimum lease payments are the amounts that the lessee is going to pay the lessor in the duration of the lease agreement. So if you look at this table here, this column shows the minimum lease payments. This is the minimum the lessee can pay during the lease term because this is what is agreed. Okay, I see someone has calculated it already. So there's 2 different ways we can present value this. So now we have determined what our payments are. The payments is the 63,000 each year for the first 4 years, and then at the end of the lease term, we're going to have an amount of 70,000. This is the minimum lease payments. But now we need to present value these amounts. So because these lease payments are going to happen at some time in the future, we want to know what is it worth in today's terms. So we need to present value these amounts. Okay, so there's 2 different ways we can present value these amounts. You can use the present value factor from the present value table that I think is available already on your blackboard, or you can actually determine what your discount factor is. Okay, so I didn't have a table with me today with the discount factors, but I actually prefer to calculate my own discount factor. Okay, so if you have a look at the discount factor, well, how do we determine the discount factor? So to determine your discount factor, you need to know what your interest rate is. So in this question, they told us that our interest rate was 10%. So in order to calculate this discount factor of 0.909, we will go 1 divided by 1 plus your interest rate. And then because this is 1 year away, we are saying to the power of 1. So that will actually give us our discount factor, okay? Or you can use the present value factor in your table. You will get roughly the same answer. There will just be rounding differences, okay? But we don't penalize for rounding differences in a test or exam. Obviously, if it's online, you will have to choose the answer that matches most closely. So if you have a look at 2017, if we want to calculate our discount factor for 2 years away, we'll go 1 divided by 1 plus 0.10, which represents your 10% interest rate, to the power of 2. And this will give us a discount factor of 0.826. Okay. And then your discount factor in year 3, we will go 1 divided by 1 plus 10% to the power of 3, because it is 3 years away that this payment is going to happen. So we're taking it back now for 3 years. So your discount factor for year 3 will be 0.751. Okay, then if you want to determine your discount factor for year 4, it is done in the same way, but we just need to use to the power of 4 over here. So we'll go 1 divided by 1 plus 0.10, which represents our interest rate. And then because this payment is going to happen 4 years away into the future, we need to present value it for 4 years. So that is going to give us a discount factor of 0.683. Okay, and then for 2020, the payment we have is that 70,000 Rand, and this is to take ownership of the asset at the end of the lease term. And because this will happen in 5 years' time, we are going to do the same thing. We are going to say 1 divided by 1 plus 10% to the power of 5, because this payment is 5 years away. Okay, so now that we have our minimum lease payments highlighted in yellow and we have our discount factor, now we can actually calculate what the present value of our payments are. So we'll take our minimum lease payment, the payments highlighted in yellow, and we'll multiply this in 2016 by the discount factor of 0.909. So we'll take 63,000 multiplied by 0.909, and this will give us a present value for this payment of 57,267 Rand. Then if we go to 2017, we'll do the same. We'll take the payment of 63,000 and we'll multiply this by 0.826. being the discount factor for 2017. This will give us a present value of the payments of 52,038 Rand. Then for the year 2018, again, we'll take our payment of 63,000 and we'll multiply this by the discount factor in that year of 0.751. And this will give us a present value of those payments of 47,313. Then if we have a look at 2019, the discount factor is 0.683, and we will multiply that by our payment of 63,000, and this will give us 43,039 Rand. Okay, then in the last year, we'll take our last payment of 70,000 and we'll multiply this by the discount factor of 0.621, and this will give us 43,470. Okay, so now that we have calculated the present value of our payments, we need to total all of these. Okay, so we've present valued our lease payments. So we need to total that, and if you total them, you should get 242,696. Okay, I see someone else has used the present value tables, and they have gotten a value of 243,117. So that is very close to the value I have. So I'm assuming the difference is due to rounding differences in the present value factor. Okay. Let's see, let me quickly cast it because some of you are saying that it isn't adding up. Okay, I'm just going to add it quick. Okay, I think you're right. I also get 243,127. Okay, must just be a typo. 243127. So now it's even closer to the value you get when you use the present value tables. Okay. So then, are you all happy how to calculate the present value of your minimum lease payments? Okay, it's not difficult once you know how, but you have to know how to use a discount factor, which you can get from your present value tables. Okay, so now that, hello?
Hello, ma'am.
Yes, do you have a question?
2019, you made an error for
Where's my mistake?
43,039 is 29, not 39.
Okay, let's check that. So it's 43,029. Okay, well done. You guys are definitely awake today. So then this will drop to 243,117, I'm assuming. Okay. Okay, guys, well, there is the answer. Okay. Thank you for confirming. Okay, so now that we have calculated our minimum lease payments, now we need to compare this to the fair value of the asset. So if it is a finance lease, one of the ways it can be classified as a finance lease is if the present value of your minimum lease payments is equal to substantially all of the fair value of the asset. So the word substantially doesn't mean all, but it means most. So if the present value of your minimum lease payments is most of your fair value, then that is another way that this item can be classified as a finance lease. Okay, so someone has done the calculation for us. So if we take the present value of our minimum lease payments and we multiply that by 100 and calculate a percentage of the fair value. Remember, the fair value was 250,000. You will see that the present value of your minimum lease payments is equal to 97.25% of the fair value. So yes, the present value of the minimum lease payments is substantially all of the fair value. Therefore, based on this, that requirement is met, and this asset can be classified as a finance lease. Okay. So now that we have gone through the classification, should this be a finance lease? Should it be an operating lease? And we've looked at the present value of the minimum lease payments. Now let's have a look at the journal entries. So they've told us here in 2.4, assuming that the lease is a finance lease, prepare journal entries for the year ended 31 December 2016 relating to Note 1. Ignore the journal entry recognizing the assets and the liability at recognition. Okay, so usually when we have a finance lease, we will go debit, lease assets, and credit your finance lease liability. But now they are saying you don't have to do this journal entry, but please do the other journal entries. So who can tell me, are we going to depreciate this asset? So in the leases books, lessee, is there going to be depreciation processed on this asset which meets the recognition of a finance lease? Okay, correct. Because it is a finance lease, we record the asset in the books of the lessee, and yes, there will be depreciation processed. Who can tell me what the depreciation journal entries are? So what are the depreciation journal entries relating to this finance lease here? Can anyone assist me? Okay, so I'll give you a clue. You need to go debit your depreciation, or I see someone has just said debit your depreciation expense and credit your accumulated depreciation. That is 100% correct. And can you tell me the amount? What would the amount of the depreciation be? Okay, so how are we going to calculate the depreciation? So the only way we can calculate the depreciation is if we determine what the cost of the asset is, okay? So the cost of our asset is going to be based on the lower of the present value of your minimum lease payments and the fair value of the asset, okay? So we determined that the present value of the minimum lease payments, it is below the fair value of the asset. So the fair value of the asset was 250,000 at the beginning of the lease agreement, but the present value of the minimum lease payments is 243,117 rand, okay? And we are going to depreciate this over the useful life of the asset being 7 years. So why are we using 7 years as the useful life? Okay, and the reason is that the ownership of this asset is going to be passed to the lessee upon a final payment of 70,000. Okay, so I've highlighted in yellow. So this lessee is going to get the asset at the end of the lease period. So therefore, we are not going to use the lease period being 5 years to calculate the depreciation. We need to use 7 years. Adam is going to have the use of the asset for the rest of the asset's life. Therefore, it makes sense to depreciate the asset over 7 years instead of 5. Okay. So let's go down to the journal entries and have a look at the journal entries amount. Okay, so we've got our cost of 243,117, and we're going to divide that by 7 years. So I get 3, 4, let me just do this flat. So 34731. So that is the amount I get for the depreciation. And I see someone else agreed with me. Thank you very much. Oh, wait, I'm writing in clear ink here. It's just something happened there. So 34731. Okay. Okay, so that is the depreciation and the accumulated depreciation journal entry. Okay. Now that we've recorded our depreciation and accumulated depreciation, what other journal entry needs to be processed? So besides the depreciation and besides recording the asset and the finance lease liability, what other journal entry needs to be processed relating to the lease agreement? Okay, we need to process the journal entry for the finance charges, and we also need to take into account the fact that the lessee is going to pay an amount to the lessor known as the lease payment. It would be that annual amount that is going to be paid. So who can tell me what the journal entry would be? What is the debit and what is the credit to record the interest expense journal entry? Okay, we are going to go debit interest and we are going to credit our finance lease liability. But how are we going to determine the amount of the interest? So we're going to go debit interest expense and credit finance lease liability. how do we determine what the amount of the interest is? Okay, we need to take the total amount of our finance lease liability being 243,117 Rand, and we need to multiply that by the interest rate given to us of 10%. So that is going to give us 24317, I think, or 117. Let me just this. 248 now. Let's change my print. 2 2 4. Let me just see. So 243. 1.7. Okay, let's see if you guys got the same. Okay, perfect. So the interest is going to be 10% of the lease liability, which is equal to the present value of the minimum lease payments. So the interest is going to be debit interest expense, credit your finance lease liability for an amount of 24,311 Rand and 70 cents. Okay, now there's two different ways you can do these journal entries. Some people will combine the interest expense with the payments of the lease liability, or you can show them separately. Okay, so let's show them separately first, and then we'll have a look at them together. And both ways are correct. You do need to understand both ways because you never know what we're going to give you with the journal entry testing online. Okay, so let's have a look at them separately first. We've said debit interest expense and credit your finance lease liability, but now we need to account for the annual lease payment. So when we have a payment, so the lessee is going to pay the lessor an amount of 630,000, or is it, oh, sorry, 63,000. So that is going to be the amount of your payment made. Okay. So the best way to think about this is that the lessee is going to be paying the lessor 63,000. So it is reducing our finance lease liability, which is why we are debiting our finance lease liability. Our liability is getting smaller, and because we are paying this money out of our bank account is also getting smaller or decreasing. Okay. So now these two journal entries can actually be combined into one, okay? So if we want to combine them, we'll go debit our interest expense of 24,311 and 70 cents. And then we'll be paying out of our bank account 63,000. Just fix this. So we'll be paying out of our bank account 63,000, and then the difference between these two. So if you look at these two journal entries, the common aspects or the common account in these two journal entries is your finance lease liability. So if we want to combine these journal entries, there's only one line item called finance lease liability in the combined journal entry. So if we want to combine these two journal entries, we will be basically netting off the finance lease liabilities into one amount. So we'll take 63,000 and we'll subtract from 63,000 the 24,311 and 70 cents. And that will give us an amount here for our finance lease liability of 38,688 Rand and 30 cents. Okay, I see you guys got it as well. Well done. Okay, so I mean, you can show them separately. If it's up to you, you must do it the way you understand. You can show them separately in 2 separate journal entries, but the problem is maybe you'll be asked to combine them into 1 journal entry. So you do need to understand how to do that. Okay. So that is the journal entries relating to note 1. Let's have a look at the next question. Okay, so the next question relates to note 2. So let's just refresh our minds. It says here, Adam Limited also entered into another lease where it leases a building under a 20-year operating lease. The lessor gave Adam Limited a rent-free period for the first 3 years as an incentive to the lessee for entering the lease. The lease payments are fixed at 10,000 Rand per annum for the lease period. Okay, so we have another lease here. Let's have a look at what the required is asking. Okay, so just to go back to the previous question, someone is asking, how can we determine if it has to be the debit side or the credit side? I feel the best way to answer this is to understand what you're doing. So if we are paying an amount out of our bank account, then you know bank is decreasing. So if you know it is decreasing, it there. Sorry, can you guys see me? My battery is a bit low, but we'll carry on. I'm not sure if you heard that. But yeah, we'll just quickly finish the session. I have load shedding, but I have been fine up until now with my battery. Okay, let me just quickly finish. Okay, so someone has asked, how do we determine if it has to be a debit or a credit side? So I think the best way to determine that is to understand the journal entry you are processing. So if we are making a payment to our lessor, we know that this payment is coming out of our bank account. So our bank account is decreasing or reducing and getting smaller. So if our bank account is going to be getting smaller, then it needs to be a credit bank. Okay, you need to credit bank account for your bank account to get smaller. And in the same way, if we are raising our interest expense on our finance lease liability, we know that our interest is a debit account when we're raising our interest expense. So I think you really have to understand your the transactions you are processing and whether it makes something bigger or smaller. Sometimes just to think about it logically might assist you. Okay, so let's have a look at this last question here. It says, prepare the journal entries for the year ended 31 December 2018 and 2019 relating to note 2. Okay, so in note 2, you'll see we have an operating lease. And this is different to a finance lease. So an operating lease is a lease where we are not going to record the asset. So generally under an operating lease, we just get the use of the asset, but there's no like ownership, no passing of ownership, no risks and rewards passing. So under an operating lease, we don't record the asset and we don't depreciate the asset and we don't record a finance lease liability. However, we still have journal entries we need to process under an operating lease. So under an operating lease, we are simply renting this item, recording, the lessee will record the lease payments for our operating lease. So here we have a lease for a building, a 20-year operating lease. The lessor gave Adam a rent-free period for the first 3 years as an incentive to the lessee for entering the lease. The lease payments are fixed at 10,000 Rand per annum for the lease period. Okay. So now under an operating lease, especially this operating lease here, for the first 3 years, it says it is rent-free. But then for the last 17 years, rent is going to be paid of 10,000 Rand per annum. Okay. So we need to smooth this. So we want to have a constant rate to record as our rent expense. So what are we going to pass as our operating lease expense? So because nothing is received in the first 3 years, and we need to basically smooth our payments so that we are not having huge fluctuations in our income statement. So what we need to do here is we need to calculate what is the total Rand amount of our operating lease payments. So we know we're going to get 10,000 Rand for 17 years. So if we take 10,000 Rand multiplied by 17 years, because that is how many years we are going to be receiving our operating lease. Sorry, that is how many years we are going to be paying for our lease. We will get a total amount of 170,000. So this is the amount, the total amount the lessee is going to pay the lessor through our operating lease payments. But now this amount here needs to be accounted for over the 20-year operating lease period. So in order to determine an accurate amount that we must process to our statement of profit or loss, we're going to take 170,000 and we're going to divide it by 20 years. And this is going to give us an amount of 8,500 per annum. So because there was nothing in the first 3 years and then all these rent payments in the last 17 years, we don't want to reflect such fluctuations in our statement of profit or loss. We want it to be smooth. We want a smooth effect there. So by taking the total rent amount to be paid, being 170,000, and dividing it by the period of the lease, being 20 years, that will give us 8,500 Rand per annum. Okay, so that is the amount we actually want to process in our accounting records. So let's have a look at the journal entries for this. So in the first year in December, we will say debit operating lease expense. So this is basically our payment for our rent. And then we're going to say operating lease accrual. And the reason we are using the operating lease accrual account is that this amount of 8,500, it is not actually physically paid out of our bank accounts at this stage. Remember, the terms of the lease agreement are that for the first 3 years, it is rent-free, meaning for the first 3 years, we don't have to pay rent. So we are not physically taking the money out of our bank account and putting it into the bank account of our lessor. However, we want to record some of the expense now. So we'll say debit operating lease expense, 8,500, credits our operating lease accrual account. So this is basically raising a liability, saying we've had the use of the asset for this year. We're not paying for it physically now out of our bank account. However, we want to show that we have used we want to show that because we have used the asset for a year, we want to raise an accrual for it. It's almost like a IOU kind of a thing. So we'll go debit operating lease expense, credit operating lease accrual for 8,500 in the year 2018. Okay, then let's just have a look at when the lease agreement was entered into. Okay, it doesn't give a specific date, but it was probably 1st of January 2016. So assuming it's the 1st of January 2016, they're going to get 2016. They're going to get the year 2016, 2017, and 2018 rent-free, okay? But in 2019, we will enter into the last 17 years where they will be paid. So when we now need to record the journal entry when the rent is actually being paid, we're going to go debit operating lease expense. And now this amount is actually coming out of our bank account. We're going to go credit bank 10,000 Rand. In reality, the lessee is paying the lessor 10,000 Rand per year. But because we recorded some of that expense in previous years, we are going to keep our operating lease expense at 8,500 Rand. And then the difference is going to be reducing our operating lease accrual account, which was raised in the prior years. Okay, are you still with me? So here with the operating lease, we are basically just smoothing the lease payments over the 20 years, even though only for 17 of the years the rent is going to be paid. And the reason for this is that we don't want erratic incomes and expenses in our statement of profit or loss. We want to show a smooth, constant effect, okay? So in 2018, because rent is not going to be paid physically out of our bank account, we will raise an accrual. So it is debit operating lease expense, credit operating lease accrual of 8,500. Then in 2019, we actually are paying the rent here. We are paying the operating lease amounts because we have entered into that 17-year period. So physically out of our bank account, 10,000 Rand is going to come out of the lessee's bank account, and it's going to go to the lessor's bank account because we are actually paying 10,000 Rand per the lease agreement. But we don't want to show such fluctuations of income and expenses in our statement of profit or loss. So we're going to go debit operating lease expense of 8,500 Rand, which is consistent to what we've done in prior years. And then we're going to be reducing that accrual we raised. So the reduction of the accrual is now being reversed. So we will debit our operating lease accrual account. Okay. I hope you guys could hear me. My battery seems to be fine. Do you have any questions on this lease journal entries? Okay, no questions. Okay. Well, that is it from me, guys. Thank you for coming. If you have any questions, you're welcome to email me. If you're confused about anything, just email me. The recordings will all be up of this session and the session I had this morning on the vision lecture. Okay, all the best with studying for your assessments. We hope everything goes well. Okay. Okay. Bye, students. Oh, wait, let me